It's good to have you. This is Business Breakfast coming to you live from our studios here in Lagos, Nigeria's commercial capital. And let's get straight to business of the day. Nigeria attracted a total of 1.57 billion in capital inflows in the first quarter of 2022, falling by 28.1% compared to $2.19 billion dollars recorded in the previous quarter. This is according to the recently published capital importation report released by the National Bureau of Statistics. Compared to the corresponding period of 2021, Nigeria's capital importation declined by 17.46% from $1.91 billion received in the first quarter of 2021. The largest amount of capital importation by type was received through portfolio investment, which accounted for 60.87%. That's about $957.58 million. And this was followed by other investment with about 29.28%. And foreign direct investment accounted for 9.85%. That's about 154.97 million of total capital importation in the first quarter of 2022. Well, let's get to this conversation. The questions will be, why do we have the foreign direct investment declining? And of course, an improvement in the foreign portfolio. Well, let's get talking now. Gentlemen, we have two gentlemen who will be joining us. Dr. Leke Ebenezer is an economist. He joins us from Lagos. And Mr. Mukhtar Mohammed is CEO of Finance Motor. These are two gentlemen that will be joining us on the show. Gentlemen, thank you. Welcome to the show. Hello, Mr. Mukhtar. Can you hear me?
Yes, I can hear you.
Okay. Good to have you on the show. Thank you for joining us.
My pleasure.
Okay. All right, Dr. Leke, thank you for joining us as well. We appreciate your time.
Yeah, thank you very much for having me.
Okay. All right, it's good to have you, gentlemen. But let's get started now. According to NBS report, foreign direct investment reduced by 78% in just 3 months over dollar crisis. We saw figures dropping from $698.7 million in the last quarter of 2021 to $154.97 million in the first quarter of this year. So let me start with you, Dr. Leke. What's your take on this decline, especially in the foreign direct investment?
Okay, thank you very much. If you, like most countries in the world, every country is part of the goal of the government is to ensure that there is significant improvement in every sector of the economy, which will then, lead to increase in foreign reserves. And then when there's increase in foreign reserve, as a result of increase in level of output of an economy, then that can attract an average investor to come to your country. Because if an investor wants to come to a country, there are some parameters they look at.
Okay, I'm sure we have Dr. Leke, video stock there. Mr. Mukhtar, are you there? Hello, Mr. Mukhtar.
Yes, I can hear you.
Okay. Just before we allow Dr. Leke to continue, we'll have him back. But I needed to give us a distinction between what foreign portfolio is and foreign direct investment. And before you give us your take on this.
Well, foreign direct investment companies that are coming here to stay for the long haul, that is coming to establish a company, MTN, Airtel, or companies came into Nigeria. Also, those that are coming to stay. For foreign portfolio investment, people that are just coming to the Nigerian equity space, either for the fixed income space or for the equity market in terms of buying stocks. So those are just the ones is coming here to establish a company The other one is coming here for what we call the hot money.
Okay. One is coming in for hot money and the other one is coming in to stay. I mean, give us your position. I don't know if Dr. Leke is back, but before he comes up, give us your position on the decline in the foreign direct investment and what you think the implications are for us here.
I like the portfolio investor that don't become foreign direct investor, because he comes first as a portfolio investor to test the water, to see how you do things, especially in the area of say corporate governance. He wants to make sure that your microeconomy stability. He wants to look at your exchange rate. He wants to see that. He wants to look at the rule of law. He wants to see. He wants to also look at the intellectual properties. So those are part of the things.
Hello, Doctor.
So
okay,
if you are not getting it right in those other places, it's always very difficult to have foreign direct.
Okay, I think we're just having issues there with the connection there, but looking at the fact that
like I said, I mustn't forget that security also is very paramount. They also looked at that.
Well, interesting. You've mentioned some reasons that the country need to look at, or some of the things we need to look at, and why you think the foreign direct investment decline. You mentioned the issue of security. You mentioned the issue of forex as well. For some of these challenges that you've highlighted, Dr. Leke, are you there?
Yes, I'm here.
Okay, we'll come back to you soon, but let's finish this thought with Mr. Mukhtar. And for you, Mr. Mukhtar, what comes first? What is the thing that we should be looking at addressing first to ensure that there is a reversal in the second or third quarter of 2022?
All right, first of all, we need to look at our securities. Security is paramount. Without security, there's no safety investment. So we need to look at the security. We need to improve our security. I think that's what investors are looking at. If you don't have security, there will be capital flight out of your economy. And that is why you see a lot of portfolio investors have left the Nigeria equity space, even because you see that that's what is responsible for the drawback that we see in terms of earnings that are coming in. Most that are going out are more than what is coming in. So I think security, as you stand now, looking at all the listing, yes, macroeconomy could be there. You could also look at exchange rate. But first and foremost, security must be key. Once there is security, it's always easier to come into the environment. You must also know that foreign direct investors or foreign portfolio investors strive more when there's a little bit of crisis in your economy, which have to do, like when I mean crisis, are not fundamental crisis. Could be crises that have to do with microeconomic space. So I like saying that the economy is like a life of a man. You go through some stages in life, and then after that, you come back to where you are. So sometimes that is what the foreign direct investors, they strive more when there is a little bit of challenges, either in the micro space, but they don't strive once you don't have that two-way exchange system. If I can't, there's no security, then I don't have a two-way exchange system whereby I bring in my phone and I can exit at when due. I think the two factors that are militating against foreign direct investors coming to Nigeria is security and the two-way exchange system. Once we are able to, I think Nigeria is always any foreign investor destination of interest.
Let's turn to your attention now to Dr. Leke. Dr. Leke, give us what you think. I mean, you were trying to give us your position on this decline earlier, but I think you also need to add to it some fundamental issues, macroeconomic issues that we need to address as a matter of urgency to bring about reversal of the decline in foreign direct investment in the country.
Okay, thank you very much for that question. Yeah. At every time any economy wants to increase our foreign direct investment, what they target is increase in the level of output, because when there's increase in level of output through all the components of GDP, consumption, investment, government expenditure, and net export, then that will increase foreign reserve. And then if foreign reserve is increased, an investor is comfortable coming to your country to invest. And of course, you know, when you are talking about the components of foreign direct investment, of course, it includes merger and acquisition, building new facilities, reinvesting profits from overseas operation, and intra-company loans. Now, for all of this to come together to make FDI increase for any economy, that country needs to target the macroeconomic variables, and of course, which are part of what Mr. Mukhtar have mentioned. You need to look at your GDP, your exchange rate. You need to look at your economic growth. You need to look at your price stability of major products. And when you are able to manage all of that, that will, increase foreign direct investment. And Nigeria, as at last year, Nigeria is contributing about 28% to the GDP of Africa as a whole, followed by South Africa, contributing about 19%. And that shows that this is where the market is. So an average investor understands that if I can get into Nigeria, or even people, Nigerians in diaspora, they know that this is where the money is. But like Mr. Mukhtar said, security is one major challenge that the government needs to look at, because whether you like it or yes, every country that is not secured will always have influence on your foreign direct investment, even when all the macroeconomic variables are perfect. So when security is not right, that will always affect an average investor, and that can affect foreign direct investment. And given the fact that if you as an investor from another country is planning to come and invest in a country, when you look at the security apparatus and you look at the future of security and you are not so sure, that may affect your investment. In fact, if you even have investment in a country where security is an issue, you will be forced to move out of that country. And these are all of the things put together that is affecting the FDI. And I hope that government should do something about that, because the benefit of foreign direct investment cannot be overemphasized, because there are 5 basic benefits of FDI, and I don't think any government wants to lose that. So for me, the government need to up their game as to managing the macroeconomic variables and also ensuring that security, which is germane, because as we speak, the safety index in Nigeria is about 35%. And what that means is that you have 65% chance of being attacked on the road, of being burgled at home when you are not at home, or whether you are at home, of being robbed, and 65% for kind of land is way too much for a country like Nigeria that is contributing significantly to the GDP of Africa as a whole.
Let's dwell a bit more on the issue of security. Yes, this is, of course, something that has been ongoing. But as it is now, it seems that because a lot of people believe that government has tried to do a lot in that regard to ensure it addresses the issue of insecurity across the country. Is government helpless, or do you think the government is helpless at this time or overwhelmed by the insecurity situation in the country? Hello, Dr. Leke.
Yeah, I'm with you.
Yeah. So I was asking you that the issue of security that you mentioned, of course, is germane and very key. But do you think, because some people believe that the government have tried to scale up its effort in addressing the issue of insecurity across the country in recent time, but at this time, do you think the government is overwhelmed? Like, are they helpless? or they are really overwhelmed by the issue of security in the country?
Okay, thank you very much for that question. For me, I have always said that the challenge we have in Nigeria is that there's a serious infusion of the political system to the economic system of the country. And so when decisions are to be made that are very most times political biasness
Hello, Dr. Leke. Okay, I think we lost connection with Dr. Leke again. Dr. Leke, can you hear me?
Yes, I can hear you.
Okay, go ahead, please.
So, because of the strong tie or infusion or diffusion of our political system and the economic system, it is really, really affecting, the solution to the insecurity issue we have. Because as far as I'm concerned, the government of every economy to ensure welfare, because that's the goal, that's the basic goal of any government. And when you are trying to do that, you will achieve what is called Pareto optimality, making sure that one person is better and the other person is not worse off. And so when people are investing all the time, and even people are told are feeling insecure as to their businesses, to their, what they do on day-to-day activity, and it's looking like the government is not doing anything. A lot of people will lose hope. So for me, the issue of insecurity is not because the security apparatus or our security system is overwhelmed. Is because the political power, the political climate is always having a strong hold on that part of the economy. And that is why we are still having a lot of this issue. If we can have a government that can be so responsive and very proactive, I want to believe that before you know it, all of these security issues we have, they will disappear. But when there are vested interests, when there are people that are benefiting from crime, you will see things like this. It will be looking as if the security issue, is a very, very big one. Meanwhile, it is not. It's only that if you can get the right person that can get things sorted, and once that is sorted, of course, the economy will take care of itself through the forces of demand and supply.
Yes,
and then before you know it, everything will be fine.
Okay, let me go back to Mr. Mukhtar. Mr. Mukhtar, are you there?
Yes, I am here.
Yeah. Dr. Leke spoke about the issue of price stability and other fundamental issues. Could you speak to that? Where do we place this issue of price stability and other macroeconomic management? Is it at the door of fiscal authority or monetary authority?
Yeah. It depends. If you look at what we've been going through in Nigeria, you realize that it seems to be that there's no fiscal authority, neither monetary authority is the only one we have, and monetary authority is beginning to do fiscal authority. You see CBN diverting into areas that are normally conventional banking space, but they are going to it like giving of loan, direct intervention in SMEs, RX 200. Those are not the key jobs of CBN. CBN is supposed to bring microeconomic stability in terms of managing of our resources. Unfortunately, what they are doing that is because they think the physical is not doing anything. So all their results are coming to nothing, so they have to act. So when you look at that, you realize that the challenge we have presently in the physical side, and that is why somebody that's monitoring is beginning to do what the physical side should do. So it's a very, very, very big challenge, and it doesn't seem a challenge that we'll be able to sort out, especially when we're in the election year where most of the politicking is ongoing. So it's a big challenge. I think the problem basically is more of the physical side than the monetary side. And when you talk about costs, you must look at costs in terms of production. And when you talk about cost in terms of production, then you are going to inflation. You see, so you cannot drive away from it. And there's what we call microeconomic inflation. And that has to do with the macroeconomic side of the economy that could trigger inflation. There's also, we have to do market demand inflation, which come by and by because of cost of demand and supply. And there is the other that has to also do with what's called cost production inflation, which is the cost in terms of how much it costs you to produce. And if you look at the Nigerian economy as it stands now, all those three variables are not at the same time. You have the macroeconomic instability happening up, that you look at exchange rate volatility, you look at the area of demand, most of imported goods.
Hello, Mr. Mukhtar. Okay, Mr. Mukhtar. Well, Dr. Lekki, I don't know if you're still there. I want us to wrap up with these. Can it be achieved? Can price stability be achieved? What can be done to achieve price stability and to address some of these fundamental issues? And of course, it's an election year, pre-election year. Of course, politicking are ongoing, as we speak. So what is likely to play out in the coming days? Mr. Mukhtar, if you're still there, I want us to just wrap up with these. Hello, Mr. Mukhtar.
Yes, I'm here.
Yes.
I'm here.
Let us wrap up with these. Give us your final thought on these. It's an election year. Yes, it's an election year. So give us your outlook in the coming quarters. I mean, we have few quarters to go for the year. So what is likely to play out if we don't take care of some of these issues that you put on the table and you and Dr. Lekki put on the table?
Inflation will keep going high. We still have the challenge also in exchange rate volatility. And why that is going to continue, because you know that once it comes to an election year, governors take the back seat. Once the primaries are over now, they are preparing for the re-election.
Right.
So definitely, it's not looking good before the end of this year.
Okay. Dr. Lekki, are you there? Please give us your final thoughts on this.
Okay. Thank you very much. You know, election years that are preceding election year is always full of activities and flow of black money. Of course, black money are money that are leaving government purse that do not have account of where they are going to. And so when that is happening, of course, that will affect the economy when you have too much of black money, because a lot of politicians will be keeping money purposely for election. And of course, most of these funds are drawn from the economic system. And just like Mr.
Well, I guess we lost Dr. Lekki again. I think we'll just have to wrap it up here. By the way, we are pressed for time. Mr. Mukhtar Mohammed, CEO of Finance with Mukhtar, thank you for your time on Business Breakfast.